David Morgan with Money and Metals for the week ending June 12th, 2015. Let's start with gold this week. Gold remains in a indecision pattern. It really didn't get much momentum this week, which is surprising based on the fact that the IMF said things had stalled out in Greece, and they basically left last Thursday saying that its delegation had left Brussels and flown home because of major differences with Athens. In that type of a circumstance, we would expect the safe haven of status of gold to at least bounce up, but that's not the case. Other pressures on gold are the purported fact that there will be an interest rate increase probably by September this year, and that, my friends, remains to be determined. Moving on, we want to talk about the currency markets. The dollar, of course, does opposite of gold most of the time. And the dollar was strong over the last week. In fact, we reached a 3-week high relative vis-a-vis other currencies. Another foreign exchange dollar news, the Bank of Mellon of New York paid a $180 million fine for their foray into the foreign exchange markets. You can read more on the internet, but basically the bank didn't admit anything, but did pay a fine. More bankers paying fines, but no criminal activity found. Too big to fail, too big to jail. The beat goes on. And in silver news this past week, Buenaventura announced last week that the month-long strike with the Peruvian miners has been settled, and they have lost approximately 1 million ounces of silver production that their CFO stated would be made up in the ensuing months with an increase in production rates. Everything's back on track with that mining activity, and expect to see more news in the silver market in the not too distant future. And that's it for this week, the metals wrap up. And finally, a footnote. I have an extensive travel schedule, which means these weekly updates will be missed occasionally. Keep that in mind.